Okay, hello everyone and welcome to the webinar, which we are delivering in association with the Association of Energy Engineers, AEE. The webinars are just one of several resources that AEE use to stay in touch with the chapter members and wider industry and interested parties. You are invited to visit the website aee.ie to understand the many other resources that are available to you. So today's webinar entitled Corporate Sustainability Reporting Directive. You can move on to the next slide, please, Liam. What we're going to cover is an introduction, really, where we're going to set the scene of what's happening and why, CSRD, the deadlines and who has to report, CSRD, what you may need to report on, and then again, how to prepare in terms of using technology and data and so on. So you can move on there, Dean, please. So just some very quick introductions. My name is Derek Sinnott. I'm a director of Lean Construction Ireland and a director of Future Focused Solutions. And I'm also a senior lecturer in SETU in Waterford in the School of Engineering. My co-presenter today is Liam McAvoy, who is the co-founder of Sustain IQ. So again, you're all very welcome. You can move on, Liam, please. As with everything we do, our goal today is really to share, educate and inform and promote both knowledge and networking amongst members and wider attendees. So really what I want to do is encourage you to actually participate throughout the webinar in the form of you can use the chat to ask some questions, and we'll address them as we progress through, or pretty much at the end, or as the end of the webinar itself. You'll have an opportunity maybe to come on screen and ask some questions. So that's really what we want to encourage people to do, because we'll present here, but again, there might be gaps in terms of what we do. So we very much invite everybody to take part. So again, as I said, the topic of today's webinar is Corporate Sustainability Reporting Directive. So I'm just going to cover and really set the scene, and then I'll hand over to Liam to go into the detail. So really, people are hearing this concept of CSRD. Some people in some organizations are heavily involved in it, whereas some are just really getting started. And I suppose what we want to do, particularly in the area and for people who are interested as part of the AEE, is maybe give a little bit of context about how maybe your existing energy reporting fits into what's required under CSRD. So the Commission adopted a proposal for a Corporate Sustainability Reporting Directive in April 2021. So that was really the start of CSRD. The regulation has been introduced as a replacement to the existing non-financial reporting directive. So this might be very familiar with larger organizations, typically organizations that are of public interest and on the stock exchange, public limited companies. So under NFRD, the non-financial reporting directive, about 11,000 organizations had to report, whereas CSRD itself will see an increase in the number of organizations now facing mandatory reporting requirements. And it's expected that there will be up to, or maybe even more than 50,000 organizations across the EU that will fall in under the scope. So eventually what's going to happen is both organizations in the EU will have to report, but also non-EU businesses over time who have subsidiaries in the EU will have to report. And that includes the UK. So may I move on, Liam, please? So just again, going back and setting the scene, in the EU, the CSRD is aligned with the European Sustainability Reporting Standards, an overarching guideline on the types of information organizations should be disclosing. However, if we take this on a global basis, regulation has been driven by financial regulators. So again, just to go back a little bit, so specifically the International Financial Reporting Standard, IFRS, a group known as the International Sustainability Standards Board have introduced new global guidelines that are aiming to set globally interpretable and norms around sustainability reporting. The ESRS and CSRD have been aligned with the guidance set out by ISSB. So if we just take that a little bit, we have the International Financial Reporting Directive, or reporting standards, and they set up ISSB, and they have actually set out their own ISSB standards as well under IFRS 1, which is around sustainability related to financial information. and then sustainability IFRS 2, which is climate-related disclosures. So some organizations may be familiar with that. We can move on then. Whereas that's ISSB, whereas EFRAG, which is the European Financial Reporting and Advisory Group, were actually asked by the EU Commission to act as technical advisors in terms of setting out guidelines and set up CSRD for the EU. And the purpose of that was to align with EU taxonomy. So the idea really around EU taxonomy, if we kind of think about it, is EU taxonomy defines economic activities that can be economically sustainable. So we have that as an overarching principle, and there's 6 principles within that. And then CSRD requires companies to report on sustainability performance against the EU taxonomy itself. So at the very high level, we have regulators and regulation that we must comply with. Now, CSRD has very recently been launched, and the ESRSs, which we're going to go into a lot more detail later on, are very, very new. But what we have is a lot of frameworks and reporting standards that have been developed over a number of years. And again, some organizations may be quite familiar and others may be not so familiar with the likes of GRI, the Global Reporting Initiative, things like CDP, Science-Based Targets Initiatives, various ISO standards as well. And maybe for our friends in the UK or people who deal with the UK sustainability disclosure standards are on the horizon as well. So those standards are been developed, and a number of organizations have been reporting and using these frameworks over a number of years. And what has happened in recent years is they have become more closely aligned with the requirements of CSRD. And again, underpinning those are the kind of global initiatives and global targets, goals. So pretty much everybody at this stage is familiar with the UN Sustainable Development Goals, GHG protocol. So that's just, I suppose, the hierarchy that we wanted to elaborate, and we're going to elaborate on as we go through the presentation today. So as you can imagine, and as we see, there's an awful lot evolving in the whole space, and it's very dynamic. ESRSs have just been launched, but what we see is there's more to come. As I was alluding to earlier, this sustainability disclosure standards in the UK are due out in 2024. And another thing that we just wanted to bring your awareness to is the embodied carbon tax, is around embodied carbon tax, and that's the new carbon border adjustment mechanism in the EU. And that's really going to affect products that are going to be imported into the EU from non-EU nations. The carbon tax that's attached to that. At the moment, there's only 6 that are covered. It's coming in October this year. So, and they are, I suppose, nominally steel, cement, fertilizer, electricity, and there's 2 more that I just can't remember at the moment. But CBAM is going to again take a center stage in terms of how businesses operate into the future as well. So simply put, we believe there's a huge amount that's currently happening, current changes, and we won't be able to cover it all today. So what we've done is we are making an ebook available to all attendees today. So that will be provided at the very end. If you want to move on, please. So what we're going to just look at in a little bit more detail as we move through is who needs to comply. So again, as I said earlier, about 50,000 companies are going to be required to report on the environmental standards. So what's currently happening is organizations who have been reporting under NFRD will have to report in 2025 on 2024 activities. So that's happening. Large companies, some companies are already well aligned to that. So you need to be gathering data from January 24, really, for those organizations. What maybe is going to hit a bigger number of organizations really is the second category. And these are large organizations that have a turnover of 40 million euro or more, at least 20 million euro in assets, or have 225 or plus employees. So in terms of that, you must hit 2 of the 3 thresholds to be in scope for CSRD. So from today, what maybe one of the takeaways, if you're not familiar about your organization that you're with, whether you're in scope or not, is potentially just go back to finance and ask them, are we going to be in scope with CSRD? For those large organizations, they will have to report in 2026 on 2025 activities. So it's not too far away, so we need to be gathering the information there from early 2025 to report in 2026. And again, it's going to be phased in over a longer period again for small listed SMEs. So just maybe to look at that graphically again, to set it out a little bit more clearly. So reporting June 2025 on 24 activity for large organizations, public interest and public organizations. Phase 2 is 2026. And that's really going to catch a large number of companies that already don't have to comply with NFRD. So that's going to catch a large group. Reporting is due then in 2026 on list, or in 2027 on 2026 activity for listed SMEs. And I suppose the key note there is listed is the term. SMEs are not necessarily going to be captured directly under a CSRD, but the big thing is there's going to be a big influence on all industries, businesses based on these reporting requirements. And then further down the tracks, a little bit pushed out, reporting due in 2029 on financial year of 2028 for any non-EU businesses that fall under the definitions requirement or have subsidiaries in the EU. So big year, big amount of work coming down the tracks. So that's what we're here to do, to try and enlighten you a little bit about how to maybe prepare for that. You want to move on? So at this point, I'm going to hand you over to Liam to bring you into the detail. Thanks, Liam.
Okay, thank you, Derek. Cheers, and thank you for that overview as well. Folks, we're going to spend a little bit of time now diving a little bit deeper into what it is we actually have to start reporting on. And as you can tell from Derek's opening there, there's a huge sort of alignment with financial performance, and that's the direction of travel here with ESG. In terms of the non-financial reporting, all of your ESG performance, getting that up to par on a standard with the financial reporting. So you're going to see a lot of alignment, you're going to see a lot of synergies as we kind of work through that. As we have a lot of people on the call today, all coming from different organizations, different shapes, different sizes, we are going to take a bit of a high-level overview. Again, we're restricted on time today, so we'll touch in on the main points. And really today is just to make you all aware that these deadlines, they're getting closer. If you fall into scope, fall under the criteria, it's really just today about making a start. And even if you don't, it's about using that window of opportunity to start thinking about your own organizations, how you go about getting visibility of performance data, access to that accurate, reliable data that you're going to need at some point in order to report and comply under the various sort of requirements. Folks, very quickly, in terms of an introduction, I'm Liam McAvoy. I'm one of the co-founders of SustainIQ, and SustainIQ is the all-in-one ESG and sustainability reporting software solution. So we do help companies capture all of their ESG related data right across their entire organizations, pulling it all into one place to enable them to report and comply in various pieces of legislation, different commercial drivers, and so on as well. So we'll take a little bit of a closer look at SustainIQ later on in the webinar. But for now, let's get back to the topic and let's take a look at the reporting requirements themselves. So we're going to just take a look at two areas this afternoon. We're going to look at CSRD first, and then we're going to look at the ESRS standards, which, as Derek mentioned earlier, have recently been published. So we now have a lot more sort of structure in terms of what the requirements actually look like for organizations. But focusing in on CSRD first, I think it is important at this point just to remind everyone that we are at the start of this journey. And yes, deadlines are fastly approaching, but it's important not to get overwhelmed at this stage. You know, there's time to get all of the procedures and so on that's required in place to ensure that all companies are able to comply from the dates going forward. So looking at CSRD and looking at what organizations are required to report on, what they're required to disclose, and I think it's as we work through this as well, it's important that you start to think of the different opportunities, the challenges of which there are many, but there's also a lot of opportunities available there as well. So in terms of what companies are now going to be required to report on and disclose, obviously, the resilience of their strategy in relation to sustainability risks. So we're looking there at a double materiality assessment. And that's actually a key element of CSRD because it helps determine the scope for reporting for your organization. So we're looking at organizations now doing a double materiality assessment to identify both impacts on people, on the environment, but also as well on the sustainability matters that are financially impacted. And as you work through that materiality assessment, those risks, those opportunities will start to become very, very clear, directly related to your business as well. And it's important that you outline those risks and you outline those sustainability matters as well. I think it's important that anything that we do here is linked. And again, Derek has mentioned this earlier in the webinar, that we link it through to other EU goals, such as EU taxonomy and so on as well. It's important that the organization, the group, takes into account wider stakeholders, and that includes the value chain. So it's, yes, your direct business, but then also indirectly out into those wider stakeholders as well, and that the strategy considers all of the sustainability matters there too. Within CSRD, you do have to outline the reporting and the governance structure and I suppose the diligence and also the assurance process that sits behind that. You have to be able to stand over all of this stuff. So it's important that that's all set out. And then, of course, the indicators, the KPIs, all relevant to all of the above, have to be clearly set out as well. So look, that's a bit of a high-level overview of CSRD, but I really want to get into the ESRS, which is the European Sustainability Reporting Standards. And as Derek said, these have been recently published, and there's 12, and they give us a really good guideline in terms of how we move forward with this. I think it is important, though, that the announcement that the first set of ESRS standards that have been published, we do expect more coming. As sustainability, as ESG continues to evolve, so too will the reporting requirements, therefore so too will the data requirements as well. So we do expect, as things progress in years to come, there'll be more coming down the line as well. So while CSRD sets out the legal framework and reporting obligations for organizations that meet the criteria for reporting, ESRS provides the roadmap for compliance. So it's kind of like giving us the guidance in terms of what we need to do. So while ESRS, and I hear myself saying this constantly out loud, but while ESRS and CSRD are interconnected, it is important that we understand the difference between the two as well. I suppose put simply, CSRD is the law, and ESRS describes what is required to comply with the law. So that's kind of how I typically sort of jump between the two. And I think back to that financial alignment as well, like ESRS outlines what information on ESG metrics organizations need to report to ensure compliance with CSRD. And the ESRS is standardizing ESG reporting very, very similar to financial accounting and auditing. And in fact, the ESRS outlines the specific EU compliance and disclosure information that's required by the European Commission, but also by the European Financial Reporting Advisory Group as well. So there is direct alignment there. And I think it's important that we recognize that. And as a result, we are now starting to see a lot of ESG reporting requirements fall under, it's not across all organizations, but in terms of trends that we're seeing across the board, ESG very much becoming part of that financial team department within organizations in terms of taking ownership from the compliance aspect and the reporting aspect as well. So ESRS outlines 2 guidelines for EU level reporting that are designed to help companies fulfill the CSRD requirements. So ESRS 1 explains the guidelines about general disclosures for all sustainability matters, and then ESRS 2 outlines specific framework guidance for structuring sustainability reporting. So we take a little bit of a closer look at the ESRS standards that have recently been published. So we've now got 12 in total, including ESRS 1 and 2. And as you can see on screen, they've been sort of obviously separated up under each of the ESG banners that they technically belong to: environment, social, or governance. And companies need to assess which topics to report using their double materiality assessment. So as you work through that materiality assessment, it'll become clear which ESRS standards you do need to start reporting on as well. So it requires information that is material from either a financial or an impact perspective, and companies also need to include information from the value chain as well. So together, the 12 ESRSs require companies to provide information on governance and strategy, addressing the material sustainability topics. It requires impacts and risks and opportunities arising from those topics. And it also requires all baselines are established, metrics and targets are applied. And it is important that all of this is backed up with an audit trail. So you've got that assurance in the background as well. So hopefully that distinguishes a little bit between CSRD and ESRS. And I think going forward, ESRS really for organizations in terms of what it is we need to report on and what we need to do to ensure compliance with CSRD is going to be obviously our main roadmap, if you like, going forward. So it's actually brilliant to get this guidance, to get them published. It gives everyone a much clearer idea in terms of next steps and what it is we actually need to do. But I think looking at those standards on screen, those topics on screen, it's clear that all of this requires huge amounts of data right across the organization, and data is key. Access to data is key to enable the reporting that is now required. I think it's important that we just highlight this note as well, because this is quite recent from the EU in June. So they have recognized the burden of reporting under CSRD and what is actually required from businesses in terms of, I suppose, completing the materiality, understanding where all of the data is. If you even have it, you might have to start capturing it and putting all those policies, those processes in place. So it's a huge amount of work, a huge effort required. So as a result, in June 2023, they made an announcement in an effort to ease the reporting burden for smaller companies. So the EU Commission has proposed allowing companies with fewer than 750 employees to emit which would be Scope 3 greenhouse gas emissions data, which is a big, like Scope 3 is a huge, and we're going to talk a little bit about that later, but in terms of the reporting on greenhouse gas emissions, Scope 3 will be the main bulk of every organization's footprint, just due to the size of the supply chain and so on as well. So just to emit that for now does take a lot of pressure off companies with regard to reporting. And then also ESRS S1, which is own workforce disclosures, and this is just for the first year reporting. And then also skip disclosures in ESRS E4 biodiversity, S2 workers in the value chain, S3 affected communities, and S4 consumers and end users for the first 2 years of the CSRD reports. So I suppose, like, once we make a start and we start pulling the data together and producing the reports, we'd actually realize that list there of items that have been omitted for the first year, and then also for the second year, the bottom list, it's actually a huge amount of data, and it does take a lot of pressure off companies while we sort of start this new era of reporting non-financial performance. So it does definitely help. However, it's important to note that it is temporary, and it just provides a window of opportunity to get the process in place so you can start capturing the data that will be required to be reported on each of those after the first year and the second year and so on as well. But it is key that data is the most important and crucial aspect of CSRD and ESRS compliance. And I think that that's the big difference that needs to always be highlighted around ESG and sustainability. So like sustainability in the last 10, 15 years, it's always been very much viewed as a nice thing to do. And I think in the next decade, it's very much a must do. And ESG reporting is a requirement for all businesses. Whether a legal driver or a commercial driver or whatever stakeholder driver there might be, you can't do any of that unless you've got access to accurate, reliable performance data, because the data is required to do the reporting. So it is essential that you get those robust processes in place, you get access and visibility to that data in real time, so that you have access to it, and you can easily pull the reporting requirements together as required. So we're going to take a little bit of a look at that, because the reality is the amount of data that's required, particularly for the larger organizations getting out the gate first under the compliance requirements, it's impossible without some sort of digital solution. You know, you need some sort of digital tools in place to help pull the data together and help put this together for you. Also, it is important to highlight that the data is part of the reporting process. So it does have to be supplied with reports, and they've introduced the data tagging. European Single Electric Format regulation requires companies under CSRD to send the necessary ESRS data to the EU Commission via a digital format. And companies must prepare their financial and management statements in an electronic format in accordance with the EU sustainability taxonomy and digitally tag the reported sustainability information. And I think that middle bit's important there, because this has actually already been done as part of financial reporting and accounting. So it does exist. It already exists. It's already been applied under financial reporting. And again, it's just another alignment where financial reporting and non-financial reporting, they're starting to align in terms of company performance and so on as well. Third-party assurance will always be required, and while it'll be less strict than financial requirements for now, limited assurance of the sustainability information must be provided as well. So you can just stand over the performance, you can stand over the data, and so on as well. So look, we're going to share a little bit more information around the technical stuff later on as well, because there's a lot to it. And again, it's really just about getting familiar with it and making sure you're starting to do what needs to be done, and there's no surprises down the line once you start to get close to that deadline. So it's just about being aware of all of the requirements, the deadlines, the dates, and also how the data has to be provided as well, because it is set out quite well by the EU. So we'll come back to that in a minute. Just if we take a little bit of a more granular level look, and again, we're online today with the Association of Energy Engineers, so I imagine quite a few of you are working in that space. So ESG is a huge topic, environmental social governance. So for the purposes of today, we'll just maybe look at the E, the environmental, and then even within that, we'll maybe just focus in on energy. And so just to give a little bit of a look into what is actually required here to get the data pulled together to allow your organizations to start reporting. So it's a wee bit of a granular look. And again, it depends who you are, the size of your organization, how sophisticated the processes are within your organization. Some of you might have access to this data in real time through energy management systems or building management systems, smart metering. Some of you might not. Some of you might still be reliant on spreadsheets, on utility bills, on meter readings. It really just depends on the organization, the size of the organization, and the level of sophistication with regards to processes that are in place. So it's not a one stuff fits all. It's very much it's going to be a unique sort of approach for each of you in terms of how you best approach all of this within your own organizations. But yeah, if we take a look just at the emissions piece first, by specifying the information that undertakings are to disclose about the following. So climate change mitigation, including scope 1, scope 2, and where relevant, scope 3 greenhouse gas emissions. So let's just focus in on that. And what would be required under CSRD, ESRS, and where the data might live within the organization. So again, obviously, greenhouse gas emissions have now been split up into scope 1, scope 2, scope 3, scope 3 upstream, scope 3 downstream. So even just emissions within the ESG data is a huge amount of work. There's a huge amount of data. We're pulling emissions from scope 1 company-owned fleet of vehicles, from diesel, oil, scope 2, we're maybe looking at electricity, cooling. And then scope 3, we're looking maybe out into the value chain, out into the supply chain, and trying to then also get access to that data through the supply chain. We're maybe looking at other methods of transport, business travel, flights, all of that. So we're talking about pulling all of those emissions, not just energy, into one place so that we can do the calculations around carbon, put a footprint together, and get all of that data prepared and ready for reporting back into the EU. So if you're looking at scope 1, again, depending on the level of sophistication in the organization, you might be going to invoices through the finance team, through the finance software even, to try to get the data required, the usage required from invoicing, from a bill of materials, might be coming from delivery dockets, might be pulled through automation. Huge investments in automation and integration through APIs. We're going to look at that shortly as well. But software such as SustainIQ actually can integrate with software like vehicle trackers. We can pull through Scope 1 emissions directly, automatically through the software. We can do the same with energy systems, with finance systems. So I think it's important to look at all of the options here. Again, it just depends on the organization and where you guys are at, but certainly there's a manual aspect to it, if required, possibly even going through spreadsheets, but digital solutions is obviously going forward going to be the best options for getting access to this information. Again, looking at Scope 2, smart meters, possibly integrations there as well, but also maybe through invoicing, a manual input collection, potentially through an app of some sort as well. Then if we look at Scope 3 upstream, maybe embodied carbon calculations using the environmental product declarations, the EPDs, they're becoming more and more readily available. The Irish Green Building Council prepared carbon factors for products and materials made on the island of Ireland, so getting a lot more sort of specific around Irish products and materials manufactured here on the island as well. And maybe looking at invoicing for transport tracking, mileage data for journeys, all of that, supplier engagement, and then Scope 3 downstream, maybe looking again at the embodied carbon, employee commuting, maybe integrations with door fobs, with biometric sign-in systems. There's loads of opportunities, there's loads of options to explore. I think the first thing is you scope out where the data is currently living, if it does exist within the business. And then it's understanding what is the best way to get access to that data on a regular basis for reporting. And again, APIs through software provide a real opportunity for that, to automate the process, to make it a lot easier and increase the level of visibility for organizations. So it's really just understanding where the data lives under each scope, how much of it you can access, and what is the best process, what is the best procedure that can be implemented to really start to move the data, get that data flow in place where there's a regular sort of reporting process. It might be manual, and it might be a digital solution, it might be automated. So it's just understanding what the options are available to you, and exploring those a little bit further. If we look at how emissions then look under the ESRS standards, so obviously it's linked to ESRS E1, climate change. It's linked to ESRS E5, resource use and circular economy potentially. And then also because of the data that's been captured and been recorded and been, interrogated, and it's being reported, and looking at the robustness of the procedures of the data capture that live behind that, and the assurance and the audit trail. Therefore, then ESRS G1 business conduct also comes into play there as well. And obviously then the general requirements, ESRS 1 and general disclosures 2 also come into play there as well. So it just gives you an idea of, you're looking at one aspect of ESG environment. You're then looking within one aspect of the environment, in this case emissions and energy, and then looking at how that then filters through to compliance requirements in terms of the topical standards under ESRS, and how you then present those under each topic for reporting as well. And again, if we look a little bit further at the more of maybe the assurance aspect, the robustness of the process as well. So the role of undertaking administrative management and supervisory bodies under sustainability matters, and the composition and their expertise and skills in relation to fulfilling the role of the access such as bodies to such expertise and skills. So that's the CSRD requirement statement. And again, we start to look at what we maybe need to consider in terms of the governance data within the organizations. It might be a sustainability committee, the composition of that committee, who the members are, what are their roles within the organization, and then looking more maybe at the quality of information that's required, their expertise, the background, the capabilities, and the acumen. So it's looking at all of that, and you have to provide that sort of level of detail in terms of the robustness of the governance process that's in place. Looking at the methodology then for data capture, and that's really important. The methodology is so important to get that consistency, that accuracy, that reliability. So looking at those processes that are in place, that it's standardized, that the data is normalized for reporting, And then if technology is in place to support and enable the reporting procedures as well company-wide. And there is going to be a lot more tech options going forward. Looking at the audit trail as well in terms of data audit prep and the means to centralize the data so that it can be calculations can be completed, such as the carbon factors applied, it can be interrogated as well, and different metrics and so on can also be applied for reporting. And then even looking at training and development, for example, where do the skills gaps exist? What's your approach to plug in those gaps, and ultimately how the business is going to become more resilient looking forward. So that's examples of what you maybe should consider the governance data requirements under CSRD. And then again, if you look at the ESRS and how it impacts with regards to the topical standards, you're really looking there at business conduct, ESRS G1. And again, applying ESRS 1 general requirements and ESRS 2 general disclosures. So look, all I'm trying to do there really is give you an idea of starting with the legislation, CSRD, looking then at ESRS, what do we actually need to report here to comply with CSRD? Okay, let's filter that through. So let's look at the different topical standards. So, okay, climate change. So what do we need to record under that? So then we're looking, for example, at emissions. And then we're looking at the different scope 1, the scope 2, the scope 3 emissions, and how that just filters right down, and in a lot of cases, right down to the granular, which might be the actual sub-meter that the data is being supplied from. So you can sort of get an idea of how it's filtering right through to businesses and right onto the ground of factories, construction sites, offices, whatever it might be, and the need now for robust processes to be in place so that you guys have access to this stuff in real time to facilitate the reporting. And look, we spoke about it a couple of times. I think we're maybe all hopefully starting to get the picture here, which is the data requirements to comply with CSRD are huge. It's vast. And so we do need to look at options. Some of you maybe already have invested in digital solutions to help start the journey. Maybe some of you haven't, but are thinking about it because you're aware just what is involved. And maybe not even, maybe after today, you're starting to think, do you know what, Jeepers, actually, we do need to start looking at what solutions, what options are out there to help us start reporting on this stuff. So in terms of mobile apps and remote access, obviously digital just makes things so much easier, so much quicker, so much more accurate, so much more reliable. And also it opens it up to a lot more people within an organization. It's less siloed in one spreadsheet on somebody's laptop. It's just accessible to multiple people, multiple departments, all of which will probably have a role going forward in terms of CSRD and ESRS reporting. So software typically, maybe it's an iPad, maybe it's a smartphone. Most employees now have access to a smart device as part of their work. So obviously using mobile technology, then there's options to very easily start capturing the data. And it might be just deliveries coming in through delivery dockets, might be reading meters. There's a lot of simple solutions that can be very easily applied to help organizations start tracking the information in real time rather than waiting for invoicing and utility bills and so on to come in maybe after a month and after a quarter. So it's about kind of looking at tech and looking at digital solutions as a way to speed the process up. With the mobile tech, then you can capture information as it enters the business, as I say, just speeds the entire thing up. And where you don't want to manually input info, there are other options such as the API and integrations and automations. Spreadsheets can be uploaded into different software, so there's a lot of options available there to apply digital solutions to simplify the entire process of data capture. Folks, I'm just aware of the time there. So if we look at the automation aspect very, very quickly, and say the data already exists in other software, such as maybe finance software, maybe it's in a building management system, or an energy management system. So the API technology could be applied. So it's about scoping out what tech is being used currently within the business, your tech stack. It's understanding, do they have an API? It might be contacting the supplier to inquire whether they do have an API available. That API just allows for potential integration with software. So it means you're able to integrate and pull and push a lot of data digitally rather than manually, which often takes a lot of time. It often removes the risk of human error as well. So just make sure that the data is accurate, the data is reliable. And again, we just mentioned there are systems that might already exist within the business, could be HR, could be finance, could be ERP. And again, I already mentioned earlier, an example might be vehicle tracker software, might be fuel cards, just to capture transport mileage and emissions, for example, as well. So APIs are useful in ESG reporting as it allows you to streamline the data flow, having control over what is being pulled and pushed between the different technology, and it just speeds everything up. It ensures accuracy, reliability, and access and visibility to the data in real time. AI is also something that's coming in very fast, and we see this having a big impact on ESG reporting as well. It is a lot of businesses are looking at AI, they're including it within their business strategies and so on. So AI is the future for a lot of businesses, although machine learning is still aspect in energy and greenhouse gas emissions reporting, where a lot of ESG tech are focusing their efforts. Technology can be used to help you to scenario plan. So if we invest in solar, for example, what is the level of reduction likely? Is it viable? What is the return? You're able to sort of plan ahead. Predictive analysis can also use any historic data that might be available to the business to determine potential future scenarios, continuously learn from the data to help businesses prepare for the future. That's also key for climate adaptation, and we're seeing huge changes in our climate month by month, year by year. It's important to kind of factor all of that in as well going forward. So look, SustainIQ is one option potentially. It's our business, and this is a large part of our future development, looking at AI, looking at the potential for predictive analysis using historical data, and so on as well. So we can help our customers kind of prepare and get ahead of this, so that they can make the best decisions. They can take more data-driven approaches to ESG, but also to those big investment decisions that they have to make around carbon reduction. Okay, folks, that's really us. I think I'm sort of mostly online. Just very quickly, just to wrap things up, and we'll go into Q&A. SustainIQ, as I mentioned, is our business. So just very quickly to give you a bit of a very quick overview, it's the all-in-one ESG sustainability and ESG reporting software solution. So we've actually got close to 200 data capture points in the system now. Companies capture lots of ESG data from right across their organization. We built our own ESG methodology across those 4 pillars that you see on screen. So they capture all aspects of ESG reporting requirements regarding CSRD and also under the ESRS requirements as well. So responsible procurement, environmental management, people health and diversity, community engagement and partnering. There's over 200 data capture points right across the 4-pillar methodology, which makes it easy for our customers to capture the data and also report on data right across their organizations. It's a multi-user, multi-site, multi-jurisdiction platform. It was purposely designed that way, currently being used in over 30 countries at the minute. So lots of carbon factors within the system that can be applied as required. Okay, look, folks, we're working with lots of businesses across lots of sectors across Ireland, and as I say, we're operating in over 30 countries, and we have a lot more on our website. So if you'd like to learn some more, go to sustainiq.com. And there's a lot more information, including case studies and contact details if you want to find out a little bit more about us there. But I think today, Derek, if I bring you back in, just to see if we've any questions in today's webinar.
Yeah, I'd encourage people, just if they have any questions, please put them in the chat. I've had some through on a kind of a sideline here as well, Liam. Thanks very much for a very interesting and detailed fly through in a sense of a CSRD and the ESRSs. I suppose the first question that's come through is there's a lot in there. Different organizations are at different stages of their, let's say, ESG or sustainability journey. For organizations who are maybe looking at this and to get started, the question that always arises, it's massive. How do we actually make a start? So if you have an answer on that.
Yeah, sorry, Derek. I just ran into if you there. So in terms of making a start to get ready for reporting, was that the question? Yep.
Yeah, or even on the sustainability journey itself, I suppose, how to get started.
Yeah, no, absolutely. Look, and I think, and actually, I'll maybe we've a 6-step guide, ebook available too, which actually we could maybe issue to everyone as well, just to get an idea of where to make a start. Look, I think, it's important that everyone really just start recording the data at this stage. We need to start. We need to understand what data is required right across all aspects of ESG reporting, not just greenhouse gas emissions, the wider sort of ESG requirements. And I think it's important to understand, well, what data currently lives and exists within the business and what doesn't, what are the gaps, a little bit of a gap analysis. So regarding the data that does exist, it's about understanding what process can be implemented to get the data flow moving so that that data can be centralized, lifted out of its silos, spreadsheets, desktops, standalone software in a cloud, whatever it might be. But then also understanding what data currently doesn't exist, but we know we now need that going forward, and starting the process there to start that data flow working as well. I think it's important to get a bit of a committee almost in house together, because it's so vast, it's so big, and if you can get help and get people on board, get buy-in.
I think that's the key, isn't it? That it's not just a silo. If there's a sustainability department, they're not acting as a silo. It's right across the business. That's the important piece, and getting people engaged and involved.
Getting people involved, getting that buy-in, that top level, board level commitment is essential. And look, if I think at this stage most people are on board, but if they're not, I think the best way to get them on board is make them aware of the impact that this is going to have on every single business, every single sector, in every single country across the globe. It's not unique to one sector or one business. It's every single one of us, so I think making sure the board, senior management are aware of the impact. They're aware of the impact to their business, to their sector. They're aware of their clients, even your customers. What are they asking for with regards ESG data and reporting? They're maybe not asking for it yet. They will be. So it's understanding what the impact that this is going to have and what your business will look like 10 years from now, and using that time wisely to get the processes in place that need to be in place.
Yeah, I'm just conscious of time. Just one quick question, Liam. Is the software available in other EU languages?
Would that be our software system?
Yes.
Yes, it is indeed. So that's we've a lot of customers on board, a lot of member states using it as well. So absolutely, it's important, guys.
Very good.
To any questions or queries around the tech, around SustainIQ, hello@sustainiq.com. Just send any queries, or liam@sustainiq.com. Happy to take them, and we can get back to you directly on that.
Okay. Very good. So just again to reiterate, a copy of the webinar will be made available to everybody who attended today, and will also be made available on the website. For those who are eligible, there'll be a CPD certificate issued as well. And remember to look out for other events into the future. Again, thank you very much for your time today, and thanks, Liam, as well, for a very informative presentation. I hope everybody enjoys the rest of the day. Just one maybe little thing at the end, just to say, if you're still interested, I know the ESG Summit is coming up again later on this week on Thursday, so you'll be able to meet another member of some other members of the team from SustainIQ at that. And even better, Liam and I are doing a joint workshop at the Lean Construction Ireland conference on Thursday afternoon in Croke Park. So if you have any questions, we might catch you along the way. Is that okay?
And Derek, just one last thing as well, we will get those ebooks out to everyone on the call today as well. So the next couple of days, we'll drop those into your inboxes.
Very good. Okay, thank you, everyone. Bye-bye.
Thanks, guys.